Got a lot to talk about today. There is a lot going on in the world, and this will have massive effects on the global economy. Everything that we are seeing play out right now in the Middle East and really around the rest of the world. We've been focused very heavily on the Middle East, and rightfully so, but don't forget, there's lots of other hotspots out there. But let me break it down for you today, give you my thoughts on what's going on, and also we're going to talk about the precious metals and the ongoing sell off in the bond market and what kind of an effect this conflict that is breaking out in the Middle East right now may have on that and how we're going to see that play out. So let's get into it. Right now, I want to start off with this story, the lead story. This is just from a couple hours ago from the Associated Press. The U.S. will send a carrier group to the Eastern Mediterranean in support of Israel. So, what could go wrong here? So, this is going to be the USS Gerald R. Ford. It is one of the world's largest aircraft carriers, the most recent addition to the Navy's fleet of aircraft carriers. It's got about 5,000 sailors, lots of high-tech warplanes, and the U.S. here sending a pretty clear message that, they can project force to this region as necessary. Now, I don't know about you, but this seems somewhat alarming in the sense that this can really escalate rapidly. The pieces are really falling into place. One thing that was reported on following yesterday's breakout of conflict. Now, I'm going to be very careful about trying to remain objective here. One thing I've noticed, I did a live stream about this yesterday, just from reading the comments there and also reading comments around the interwebs. It's very obvious that people are becoming even more fractured, even more conflicted with one another over this. Everybody seems to be polarizing. The right, even, which was seemingly unified, trying to oppose the escalation and funding of the Ukrainian crisis, now is split down the middle. So, one thing we're seeing here domestically and really just around the world, but especially here in the US, one thing I'm seeing is that people are becoming more divided over this issue, even than previously. I mean, if that's possible. But one thing that we saw was that Israel and Hezbollah are now exchanging fire. This is a big deal. Hezbollah claiming that they hit 3 Israeli posts with rocket fire, the Israelis firing back. Hezbollah is a Lebanon-based militant group. They also operate extensively in Syria, and importantly, they are funded and trained in many cases by Iran. So they're basically a proxy for Iran, if you ask me. Just my take on things. I'm not a military guy, but that's how I see it. Constitutional Stacker in the chat there. Thank you for the super chat, sir. Yes, I did get your email, man. Don't worry. I will respond to you. Probably be tomorrow or sometime early next week. Constitutional Stacker and I are probably going to do a collaboration for you folks soon, so look out for that. Sorry I haven't responded yet. You know how things are. It gets busy sometimes. All right. In addition to the fact that Israel and Hezbollah are exchanging fire with one another, we've got Hezbollah representatives coming out now. This is from the Wall Street Journal, praising the Hamas attack in Israel, and they're warning against normalizing ties with Israel. And we talked about this in yesterday's live stream, but this is interesting because this is a none too veiled threat against the UAE and Saudi Arabia, some of the more moderate Gulf states who have been attempting to normalize relations with Israel. Notably, a very important deal that has been predicated upon normalization of relations with Israel is the Hail Mary pass by the Biden administration to save the petrodollar. So that looks like it is certainly in jeopardy here. Now, I think that normalization of relations with Israel is probably just off the table. Maybe I'm wrong about that. Let me know in the chat if you have some thoughts on that. But that deal was to get Saudi Arabia to promise to continue pricing their oil in dollars and not accept Chinese yuan. Part of the exchange was they get a Palestinian state, normalization of relations with Israel, and potentially nuclear power from the U.S. But now I think that deal is off the table at the very least. I mean, the consequences of this probably run far deeper than that, but that is one of the immediate consequences that comes to mind. This guy, Hezbollah's leader, Hassan Nasrallah, said that these attacks serve as a warning against recognizing Israel. Quote, it sends a message to the Arab and Islamic world and the international community as a whole, especially those seeking normalization with this enemy, that the Palestinian cause is an everlasting one, alive until victory and liberation. So, yeah, again, this is targeted at the Saudis, as well as anybody else who looks to normalize relations with Israel. It's a very hardline position, but, again, these guys are a proxy for Iran, who has not really made it secret that they want to wipe Israel off the face of the planet. And again, I'm just trying to report the facts as I see them here. I'm not really taking sides. Thank you, Snoopy Stacks, so much for that. Hey, I'm going to take a moment here. We're about 5 minutes in. We've got 238 people watching. Thank you for tuning in. 31 thumbs up. Can we get that to 100 by the end of this live stream? It does help to get this information out there. And listen, I don't want to toot my own horn or anything. What I'm about to say is not to do that, but I think it's important to promote objective voices out there because this is a very polarizing issue. And again, it's, I think, impossible to remain free of bias entirely. Everybody has some kind of inherent bias, but I really do try to just bring unbiased information and my take on this. I try not to fall into the tribalism trap that seems to have become so strong, especially here in the U.S. Anyway, let's move on here. One of the effects that almost certainly will come about as a result of this, if you ask me, is much higher crude oil prices. I mean, they have fallen a bit from the peak down to 82 bucks. They were up over 90 just a week or two ago. But I mean, I think this number is going much, much higher as a result of this ultimately. Maybe not on Monday or Tuesday. And, we have kind of a weird trading schedule this week as a result of the Columbus Day holiday, or also the Indigenous Peoples holiday, whichever one you choose to celebrate, or if you just don't really care too much about those holidays, that's fine too. But the stock market will be open, but this is a federal holiday, so the bond market will be closed. So kind of an odd trading session that we're going to experience on Monday. It'll be very interesting to see how markets react to this. One thing that I have heard mentioned is that we may see the bond market sell-off that we have been witnessing. Here's the 6-month chart of the 10-year yield. You can see how those yields have been spiking up, causing all sorts of headaches for banks and small businesses and the U.S. government itself, who has seen the interest on the national debt exploding. But Greg Manarino in his live stream made a good point that this conflict may actually stem the tide of the bond sell-off initially, as folks are looking to move into treasuries as a safe haven. Now, to me, I mean, I don't know, the safe haven status of U.S. treasuries has got to be wearing a little bit thin in some investors' mind, considering the fact that as a result of this bond market sell-off, and you can see here, if you look at the 5-year chart, sorry about that, it's been spiking up since 2020. 10-year treasuries have lost something like 46% of their value since then. 30-year treasuries greater than 50%. So, I mean, do investors still view U.S. treasuries as a safe haven? I'm not so sure about that. If they do, maybe on Tuesday when bond markets open, we may see the yield come down a little bit. I do think that inevitably those will be going much higher, but we might see a little bit of a flight to safety. Although there will be a day when investors realize that, U.S. treasuries are not the real safe haven that they're made out to be, but that there is safe haven options out there. There are safe haven options out there in the form of the physical metals, gold and silver. Will that time come soon? Not so sure about that, but I do think that that is coming, and it may come when the bond market truly melts down. We'll get into why that is almost guaranteed to be baked into the cards. I do want to mention something regarding gold and silver, though. You might notice I've got this very nice Napoleon 5-ounce coin here. This is from the Scottsdale Mint, and this is going to launch tomorrow. So here's a bright spot of some good news amongst all of this disaster. At 10 a.m. tomorrow morning, that'll be October 9th, Monday, October 9th, 10 a.m. Eastern Time. These are going to go live at sdbullion.com/commander. These are a exclusive SD Bullion minting from the Scottsdale Mint. As you know, I love Scottsdale Mint stuff. They make some really beautiful things. And this is the first of a new series, which I'm very happy about. I think it's very cool. The Commander series. And these will feature historic military commanders like Napoleon. Napoleon's certainly an interesting character. If you're a bit of a military history nerd like I am, you know that Napoleon was really one of the greatest commanders in world history. Had something like almost 90% of his battles that he took part in, he was victorious in. Maybe if you are a military history nerd like me, you might have some, different thoughts on who's the greatest military commander of all time. But I think Napoleon's certainly in the running. And yeah, I'm really excited about these. So there's only going to be 4,999 of these available. So you will want to check that out early because the last time SD Bullion did an exclusive minting like this, they sold out in like 24 hours. So yeah, if you're interested in those, check them out at sdbullion.com/commander tomorrow at 10 a.m. All right, one more thing about oil. This was interesting. So I mentioned that this conflict will likely drive oil prices much higher. I mean, instability in the Middle East, duh, that's obvious, especially if Iran or any of the other major regional powers get drawn into this conflict. The price of oil will absolutely skyrocket. Well, today, here's one from Reuters. Saudi Arabia and other Arab states reaffirm their commitment to voluntary oil production adjustments. So more talk from OPEC of cutting oil production, basically. I mean, that's how I interpret this. They're not saying they're trying to drive the price higher. Here's a quote from them. Furthermore, the ministers reiterated the willingness of the Declaration of Cooperation countries to take additional measures at any time in their continued efforts to support market stability, building on the strong cohesion of the OPEC Plus. That's from the Saudi state news agency SPA. So they've already announced that they're going to continue their existing cuts, but clearly the OPEC members willing to cut production further if that means market stability. And to me, market stability means when they say it, higher oil prices, and that means higher profits, of course, for these oil exporters. Now, a lot of people I think get this twisted that the U.S. produces all of this oil. We do produce a ton of oil, but we consume a lot too. And so Saudi Arabia is actually the world's biggest oil exporter. I'm mentioning this because I'm just addressing some comments I got on a recent video when I talked about this. Russia, the second biggest exporter. Again, the U.S. produces more, but we consume a lot more too. So these oil exporting countries, they have a very big influence on the price and supply of crude oil, more so than the U.S. I mean, all we can really do is release additional oil from the Strategic Petroleum Reserve. But you can't do that for long because then the SPR becomes completely drained. And isn't it great that the current administration, I like to just bag on both parties because I think they both do us a disservice generally. But, I'm going to harp on the folks in power right now. Isn't it great that as we enter into this potential World War III scenario, we've got NATO troops basically operating in Ukraine. They had that German tank that had a German tank crew captured there recently. We've also got an aircraft carrier being deployed to the Middle East. As we head into this scenario, aren't you glad that the Strategic Petroleum Reserve is at the lowest level since the 1980s and it's been halfway depleted as an inflation fighting vote buying measure? I mean, isn't that just fantastic? Thank you so much for that for the super chat. Someone gave me a super chat and said they liked the Napoleon 5-ounce piece. Thank you so much for that. Yeah, addicted to precious metals. Awesome. Oh, he left me 5 pounds. All right. From across the bond there. Well, cheers. Thank you. All right. Let's move on here to a piece regarding the bond market sell-off, because regardless of whether or not the bond market sell-off is averted as a result of the flight to safety and this escalating conflict in the Middle East, ultimately, I do believe we are doomed to see the sell-off continue. One reason, look at this. We just hit $33.5 trillion. Isn't that great in national debt? What was it, like 2 weeks ago that we hit 33? So well on our way to 34. I think we're going to hit 35 before the end of 2023, especially because, think about it. I mean, if we're getting involved in another Middle East conflict, one thing you can guarantee about this war, regardless of, the outcome, who's right, who's wrong, one thing you always know about conflict is that this is going to generate a lot more debt. Guaranteed. If we're not sending more money to Ukraine, we're going to be sending it to Israel. We're going to be getting involved over there. I mean, what does it cost to deploy an aircraft carrier? Because, an aircraft carrier is not just an aircraft carrier. There's a whole fleet of ships that go along with that. 5,000 soldiers, those guys all need to get paid. Of course, they're getting paid anyway, but it's not cheap, is my point, to deploy this. And if they start launching munitions You're talking millions of dollars per munition that gets dropped in some cases. If you're finding Tomahawk missiles out there, those things aren't cheap. Especially, one thing about that is a lot of those existing munitions that we had, or had, a lot of them have been used up in Ukraine. They cost a certain amount to get the first time around. But now, because of inflation and supply chain disruptions and scarcity, it's going to cost a lot more to replace all of those munitions. And that's probably a good idea to do since we're on the verge of World War III. So this is guaranteed to generate a lot more debt. And also, I do want to get into a story from the Wall Street Journal about the bond sell-off because the numbers are pretty shocking. But I do want to say one more thing. There's this, oft stated misnomer out there, and smart people say this. I hear intelligent people say this. You've guaranteed heard this. You might believe this yourself. But the statement is that war is good for the economy. And I mean, this couldn't be more wrong. War is not good for the economy. It does sometimes give the illusion of being good for the economy because what it does is it causes this huge amount of debt to be generated that then gets spent out into the economy. And you get this temporary surge, like this sugar high. The economy gets all cracked up. And then, it's when it crashes and you get the hangover and the come down that you get a really bad economic mess. Now, I'm going to tell you an example of that and why it's the case. One, even if you're borrowing all this money from the future and spending it into the now, all you're doing is you're buying munitions that get blown up. They don't actually add any value to anybody. At the very best, these things just get exploded. At the worst, they destroy other forms of wealth. If a bomb destroys a bridge and they both cost millions of dollars, well, that is not good for anybody's economy. That is a wealth destruction mechanism, but it is a debt generation mechanism. And this is exemplified in what led up to the Great Depression. So part of the Great Depression, the roots of it have to do with World War I. At the end of 1917, 1918, when the U.S. was getting involved at the tail end of World War I, huge amount of borrowing and debt and deficit spending. I mean, nothing like compared to what we do now, but for the time, it was a lot, went on. A huge credit bubble was blown up. That led to the excesses of the roaring 20s as that money made its way through the economy. You saw a huge bubble inflated in the stock market. Everybody thought they were rich. I mean, does this sound familiar to you? And then in 1929, everything collapsed and the bubble popped, and we got the worst economic crisis, the worst depression in U.S. history. So, war is not good for the economy. Don't buy into that. There's an opportunity cost for all this stuff. All that money that could be spent building education or infrastructure or any number of things you could spend this money on. People in Hawaii who had their homes burned down could probably use some money right now, but instead it's all going to get sent over to Israel. And, who knows how it's going to get spent. Maybe it'll get spent fighting Hamas. Maybe it'll get spent flying jets around. Maybe it'll get spent fighting a broader war with Iran. But it's not getting spent doing anything that improves people's lives. And all of that money that is spent over there is all going to be borrowed. We don't have any money. It's going to cause the deficits and debts to explode. And now let's get into why that is such a problem. I want to pull this story up from the Wall Street Journal here that was published October 8th. So that's today. It was updated. I think I actually read this yesterday, so it must have been updated today. Maybe there were some new numbers. The headline is, Wall Street isn't sure it can handle all of Washington's bonds. Yeah, that's not surprising. I mean, here's the subheadline. Investors long shrugged off U.S. deficits, but a torrent of treasuries is testing the bond market. I mean, if you've been watching this channel, you know that from September 29th to October 2nd, over the weekend, if you go to the Debt to the Penny website provided by the Treasury, the national debt jumped by $275 billion over that weekend. So, there's only so many buyers of U.S. debt out there. Who is buying all this stuff? I mean, China is selling it. Japan is selling it. Those are the biggest foreign holders. The Fed is selling it. They're running quantitative tightening. They're selling bonds off of their balance sheet. So you're left to have the markets absorb all of those bonds, plus the huge torrent of new debt that is being issued by the Treasury. I mean, it's no surprise why the deficits are soaring, why the debt is soaring, or I'm sorry, it's no surprise why the bond yield is soaring and why they're selling off. There's just the supply is exploding. So reading a little bit of this for you here, Now, the steep declines in the prices of treasuries, meant to be the world's safest and easiest to trade investment, are forcing markets to confront the possibility that the rates required to place all this debt will be higher than anyone expected. Oh, shocking. If you just sell trillions and trillions of dollars worth of debt onto the market, that the value of those bonds might go down. I mean, this is like economics 101, and yet everybody's so shocked by it. Here's a chart. This is interesting. This is US Treasury issuance to get an idea of how much new debt is being issued. This is this year through September. Now, notice that this is the highest year on record, with the notable exception of the 2020 pandemic, when all that stimulus caused a huge amount of debt to be monetized. Because remember, who was buying this debt? Why didn't interest rates soar when all this debt was being issued? Well, it's because the Fed came into the market and bought like $4 trillion worth of treasuries and monetized all that debt. That's why inflation soared out of control. Well, who's going to buy all this debt? This is only through September, folks, and we're already exceeding every year on record, with the exception of this freak show year. So, what does that tell you? Well, it means that ultimately bond yields are going to go much higher. Perhaps when markets open on Tuesday, that'll be when the bond market opens. Again, Monday is going to be stocks trading. Tuesday is when the bond market will open. What's going to happen? Some people saying a flight to safety will cause yields to come down. I mean, that very well could be what happens in the short term, but if investors haven't come to the realization that US paper and debt is not really a safe haven yet, they're going to soon. And when they do, where are they going to put their money? Well, I mean, I have a few ideas, but I'm fairly certain that gold and silver will be on the short list. Assets that can't be manipulated, assets without counterparty risk. That's what you want to have when you have these kind of clown world economics. Why would you go out and buy more US debt? Again, 30-year bonds, they've dropped more than 53% since 2020. Thank you so much, Liquid Electrum. Somebody just asked in the chat where you can get the Napoleon. Well, I already mentioned that earlier in the live stream, but these are awesome rounds. It's part of the SD Bullion Commander series. It's an exclusive deal they have with the Scottsdale Mint. These are going live tomorrow, Monday, October 9th at 10 a.m. You can check it out at sdbullion.com/commander. I think if you go to that URL right now, it just takes you to the Scottsdale Silver page, all the Scottsdale Mint products that SD Bullion carries. But if you go tomorrow at 10 a.m., they're going to have these. There's only going to be 4,999 of them. So if you want to get one, you'll have to move quick. But, this is kind of where the stacker collector in me comes out. Typically, I like to buy, whatever you get the lowest premium, the most metal for your money. But if you like military history, I'm a little bit of a military history nerd, then I think you're going to like this Commander series a lot. I'd be curious, I've got some other thoughts about who might be the best military commander in the world. I think Napoleon definitely in the running. Other folks who come to mind, maybe Genghis Khan and Alexander the Great, but certainly for his era, I would say Napoleon is number one, winning almost 90% of the battles he was ever involved in. And he's certainly in the running for the top position overall. But if you're a military history nerd, let me know in the chat who you think might be the greatest military commander of all time. I would like to know. And this is only the first of a series. There's going to be more of these released. So if you think you might want to get the collection, make sure you grab one of these, because this is going to be the first one, and they'll be releasing these periodically over the next year or so. So anyway, keep an eye out for that. Very cool. But yeah, the bond market, I mean, look at how much debt they're issuing. Obviously, rates are going to continue to surge, and war is only going to fuel that massive debt bubble. Clarity says no price. I'm assuming you mean for these rounds. I'm not really sure. Check out the sdbullion.com/commander tomorrow at 10. Depends on the spot price, etc. They're super cool. So I'm going to be looking forward to picking up all those commanders. But that's it for today, everybody. This conflict is something we're going to absolutely have to keep an eye on. There is a real possibility that this could become a broader regional conflict involving Iran. That will not be good for anybody. One thing that's guaranteed is we're going to see a lot more debt, a lot more money thrown at this crisis. And don't forget, there's still the South China Sea. There's still Taiwan. There is still the Korean Peninsula where there are nuclear weapons. There is still Africa with Niger and Gabon having rebellions there, military coups, fighting between East and West. We are seeing the global South and the West. The battle lines here are being delineated. You've got NATO and Israel on one side. You've got Iran, the BRICS, the new BRICS members on the other. It'll be interesting to see where Saudi Arabia falls on this spectrum. You know, they've been calling for moderation here. I think they want those nuclear reactors. But as you saw, Hezbollah there issuing a none too veiled threat against the more moderate Gulf states. So this is all something that we absolutely have to keep an eye on. I will do my best to continue bringing you unbiased information. Do me a favor. If this video was helpful for you in any way, smash that like button, help get some of this information out there, and I will catch you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker